Hi all, Joshua Steger here from ETFadvisor.com.au, and today I'll do my usual weekly rundown of the Aussie ETF market and what investors should be looking at for the week ahead. I'm going to cover off on three key things this week. Number one, I'm going to give an update on the US market and whether or not a correction is underway. So I've got some key data to touch on, and following on from last week as well. Number two, there's some excitement in Asia and emerging markets. So we're going to look at some key ETFs and what's playing out there and what could be a really interesting week just in terms of the setups. And number three, we're going to look at some key themes in the ETF space and key growth themes going forward and how to play them from Australia. So I'm going to give you some of those key ideas we're looking at, but certainly not all of them. That's reserved for subscribers to the email. And just touching on that email, we've got that out this afternoon to subscribers. So we're covering off some key ideas this week. We'll just look at what we spoke about last week. So we were obviously worried about a bit of a correction in the US, and there's some signs that it's kind of underway. So certainly be watching out for that this week. But just in terms of our key ideas, we had Asia, Game, and Glyn last week. Asia into 3.5-year highs. We had Game all-time highs. We had Glyn, which is global infrastructure, at all-time highs, and certainly interest rate reductions will be helping that space. It's a slower mover, but still creeping up. So they were our key ideas last week. Obviously still getting some runs on the board. We've got more ideas this week and some really exciting things happening. So without further ado, let's get into the charts. So we'll start with the S&P 500, the US market. You can see basically at new highs, pretty solid week. You know, that's the first indication of correction. Got bought straight away. All looks pretty good up there. NASDAQ as well, looking quite strong, near all-time highs. Sold off here, got bought pretty quickly. And then we've also had the small caps. So here's the iShares Russell 2000 ETF. And you can see this week had a pretty strong move. And that's on the back of expectations for interest rate cuts, just on some of the data coming out of the US. And you can kind of see this is quite a constructive setup. I mean, the small caps certainly haven't done much compared to the big market indexes like the S&P 500 and the NASDAQ. But you can see as a setup, that's quite constructive. So who knows? Maybe there's a lot more in the market. But I'll touch on some key data that we're looking at there. But as I also say, it's late in the rally if the small caps start moving. So that's something to keep in mind as well. But at the moment, we're kind of hedging our bets, and we've got half a foot out the door. And here's the reason why. We're looking at the breadth. So the breadth of the market. So you've got S&P 500. This is the chart of S&P 500 near all-time highs, as we spoke about. But then we're looking at the stocks that are above their 20-day moving average, the stocks that are above their 50-day moving average, and the stocks that are above their 200-day moving average. And you can see here, we're still got, even though we had a pop this week, we've still got a general downtrend in the stocks above their 20-day moving average, the stocks above their 50-day moving average. The 200-day moving average has actually improved, but this will be on the basis that there's some profit taking in the key areas that have performed well, and there's been a rotation into, say, healthcare, biotech, which have been really poor performers. Plus, we're starting to see a bit of money in those clean energy, solar, even some of the other sectors like marijuana, pot stocks, on the basis that the laws might be changed in the US. But what we're really looking at is these kind of peaked even back in July, and then there's just been a general kind of downtrend for these two pieces of data, which indicates that the rally is quite thin. It's moving on very few or less and less stocks. So a solid rally is obviously where you're getting. So look at the lows as an example. All of a sudden, all these are uptrending pretty sharply, and that's just showing everything's participating in that rally. But once it's topped out, you're starting to see less and less participation, and particularly in these figures for the 20-day and 50-day moving average. So that's really quite interesting. And let's just look at some of the internals as well. So the big driver of the market at the moment are the Magnificent Seven stocks, so like the FANG stocks, the big tech stocks, obviously a large part of the indexes at the moment. And that's really what's holding things up. So if you have a look at those orange line, you can see it's still really strong and creeping up into highs. But then if we have a look at, say, which I find really interesting, is IGV. So this is the iShares Tech Software ETF, and another broad range of tech stocks. That's actually creeping down. So that's that blue line. It's already topped out and creeping lower. Then you've got industrials, XLI, just general industrials, and that's in purple, creeping lower. Here we've also got high beta ETFs, S&P high beta, so stocks that are, got a bit of momentum to them. That's kind of crept down. It popped a little, but then it's creeping down later in the week. And then also we've got momentum as well. So that's in green, and that's still kind of just creeping up as well. But they're the ones I'll be watching. We've already got IGV trending down. We've got XLI trending down. We'll just see how these momentum and beta ETFs kind of play out in the US. And certainly it looks like the last to peak will be the Magnificent Seven stocks. They'll be the last to get sold. So keeping a really close eye on that. If these start selling off, I'd say, we need to then start taking affirmative action and take some money off the table. In terms of correction, you're probably, looking within like a 5 to 15% kind of pullback. So keep that in mind. And that means for some individual stocks, the pullback could be quite significant. So, we only have to look at, say, some of the key performers from the rally. So Netflix was a really key stock to perform from that tariff low, and you can kind of see already, let's just measure that from the highs, was off, there's 14%. It's improving a little bit there. Obviously some of them have done even worse than that, so it just shows you, even if the index only pulled back 5%, your stock could still pull back 14 or 15 or 14 or 20 or 25 as part of a normal correction, because the rally from those lows has been pretty significant. So there's 60% rally from April. There's big profits to be had, and if people want to take some money off the table, who knows what the catalysts will be. Obviously there's some data points this week in the US, but that's something to keep in mind. So that's pretty much a summary of what we're seeing in the US. As I said, one foot out the door, we want to protect those profits, and we just have to be careful. Obviously the US market's such a big part of the global market. We've got to be careful, what that impact will be on other parts of the market, on the Aussie market, on resources, on Asia, and that type of thing, how that sell-off will play out. But certainly a correction's really healthy at the moment, and will be a buying opportunity, and certainly that's what we're positioning subscribers to be at the moment, is to have a bit of cash, be ready to protect your profits, but this will be the time to get ready to get into those really key themes for the next run, hopefully later in the year, but early days. We're not even in a correction yet. So that's the first point. Number two, let's look at Asia. It's actually really exciting at the moment, and it's something I've been talking about for quite a long time now. And here we can see, here's the Hang Seng index. So really, let's even draw this back to a monthly chart, and you can see it really hasn't done a whole lot for many years. It's kind of a forgotten market. So if you look, this is 2018, this is 2021, and it's just a really forgotten market. But now let's look at this setup on a monthly chart. It doesn't get much better than that. Look at that, just a perfect kind of cup with handle. There's your base, and it's just creeping out of that. So let's draw into a weekly chart as well, and we'll just zoom out there. But in terms of a bottoming setup for a broad market index, it just doesn't get much better than that. Look at that base. There's kind of your handle, or you could look at a different way, just a full big saucer kind of pattern, and there's your breakout point. So it's only just moving up to that now. Let's draw that in on a weekly chart, and you can kind of see that kind of VCP, volatility contraction pattern, which is obviously the pattern popularized by Mark Minervini, and certainly I recommend you read his books. But just in terms of, you can kind of see the compression, and now it pulled out this week, and then it's kind of retested. Let's just zoom in a little bit better so we can see it a bit better. But just in terms of the recent action, we're looking for it to get some support here. It did pop this week, and that's on the back of 10-cent earnings, and we've also got some other key companies that have reported earnings in Asia, which were quite good. So it's kind of popped out. It's testing that highs. It's a little bit sharp. It's sold back in. I mean, is this going to be the last point where you can buy a good exposure into Asia? And certainly we, for subscribers, have been taking key positions through this zone. So it's all looking pretty exciting, and this could be a big week for Hong Kong. But also, here's China, a pretty kind of forgotten market. Just delete that little picture. A pretty forgotten market, just in terms. Let's zoom that out onto the monthly chart as well, and you can see it's previous highs for China back in. This is the China 50 top 50 stocks back in 2021. Just a huge downtrend, and now this was the stimulus announcement, and now you can kind of see, and then it's kind of hasn't done a whole lot, but it's looking like it's starting to creep higher, starting to move out of this consolidation. Which has basically been in since October last year. So, almost September. 10 months, nine or 10 months, just kind of biding its time here, but slowly creeping up. You can see, look at all those green bars, all the buying. One week of selling, and then kind of creeping higher. So on the daily chart as well, it's looking really constructive. So this could be a big week for China, and the reason why I'm quite optimistic on that as well. So this, it could be a really big week for China, and the reason that quite interested in that is look at some of these ETFs. So one that we've really been pushing for subscribers is CNU. So this is kind of China new economy stock. So it's not the A50 per se. It's going to have kind of new companies, like new sectors. Emerging sectors. So you can see, it looks, even on the weekly chart, looks very much like the Chinese index, but it's also already started to run. And here we've got 1, 2, 3, 4, 5 weeks of back-to-back buying, volumes increasing into highs. There you've got the really constructive kind of VCP pattern, and it's just creeping up. So that's really exciting. That's kind of leading the Chinese market out. And that's what can happen with some of these ETFs if you know what you're looking for. This is a really good indication that we've got CNU kind of leading the China A50 index just in terms of performance, and that's what you want to see. Another example, obviously, we've talked about that the last few weeks, and this has been our key holding to play for the Hong Kong market, and this is Asia ETF, and that's kind of leading also the Hong Kong market because it's already crept into highs here as well. And you can see once again, there's your really constructive VCP pattern, and it's just kind of creeping higher, pop this week. What we'll be looking at is earnings. So we had 10 cent. We were waiting on that last week. We spoke about that in last week's video. That reported. There you got a earnings pop, 7%. It's into highs, and then if we pull back on the monthly chart as well, you can kind of see we're now back to, we're not at all-time highs, which was in 2021, but you can kind of see we're back to July 2021 in terms of performance. So that's really constructive on the monthly chart as well. So there's potential for a big move there. And what people have really forgotten about Asia, and these big tech stocks in Asia, is that they have huge investments in AI as well, and that's kind of really been forgotten. So that's what's coming out now with these earnings, and now we've got Alibaba this week will report as well. So in terms of a bottoming setup, I mean, it doesn't get much better than that. Again, that's a really nice base cut with handle. This looks really quite constructive. I've already got a bit of a trend line in there, and you can kind of see that's what tends to happen. There's your downtrend line. It popped above it. It tries to go retest, and then we've got, I think it'll be, well, it's uncertain. We don't know when, but on TradingView here, they're saying Thursday could be the earnings day, and I'll be really interested to see how this plays out. But it looks like it's set to move, and if Alibaba gets going, I mean, just look at the potential. Previous highs there, 320 and it's trading at 120 at the moment. And think about what's happened just in terms of probably their business as well as AI and whatnot. And look at the valuation discrepancy between, say, Alibaba and Amazon and the big tech stocks in the US, which are at all-time highs or close to, and this is nowhere near, but it's setting up a really constructive base. So really exciting week for Asia. I hope you've got a good key exposure in that space. So as I said, you want to have your exposures in this space. We've been talking about that for quite a few weeks for subscribers, so hopefully we've got good exposures there. The only one that you could consider now, which is not going to be the best of all, but CETF, and this is just the China A50 index. So as you can see, it's basically just tracking the Chinese 50 index, but it's right at that point where it could start moving. So really, once again, constructive VCP type pattern. And yeah, so that's one idea this week. But as I said, in subscribers, we've been pushing this for a number of weeks. We're just saying Asia, Asia, Asia. We've got kind of three or four key ETFs in that space, and we've really got profitable exposures already. And it feels like it hasn't even moved or is just about to get going as well. So on the other side, we've also got a bit of action now. So it's not just China, we've also got Japan into highs. So that's pretty exciting as well. I've probably underestimated Japan a bit here. And just in terms of, they've got a lot of tech stocks. They've got a lot of manufacturing stocks, robotics, high tech kind of companies. And I think, yeah, they're going to be a big beneficiary going forward. So there's your kind of weekly chart into all-time highs. Maybe a little bit extended here, so we've got some ideas of how we might want to play that for subscribers. But as I said, I've underestimated that, but that's looking really good as well. And then we've also got South Korea. So this is also another kind of forgotten market. And then all of a sudden, just look at that move. I'm not even sure what the catalyst was here, but from kind of May, just shot up. I think in terms of a move from the lows, it's about... where's it's going to come up? There's 20%, 25% in a country index is a pretty big move in a really short space of time. So that's why you want to watch it. It's kind of looking like it's setting up. I mean, it's tried to push, and there's been sellers here. Might need one more contraction, and then it could potentially go. But once again, South Korea, another key kind of tech. They've got a lot of tech companies, and they've got manufacturing, robotics, all that type of thing. So that's one to watch, and in Asia again. So that's why I'm saying for number 2 point this week, Asia. Let's watch it. It's exciting. I think there could be some big moves this week, and a few of those things will be the earnings playing out. Alibaba will be one, but there's also a lot of other big tech companies in China and Hong Kong that are reporting. And then we just pull back to ECNS, which is a China small cap ETF. And this is unfortunately not listed in Australia, but it's in the US, and I keep an eye on it. And you can see there was kind of probably the first point of resistance. It's just on the weekly chart. It's got so much strength. It's just creeping. It's kind of new recent highs. It probably can run back up into the 40s here as well before it finds further resistance. So that's really strong as well, and you've got a lot of earnings. So we'll see how this all plays out. If we've got the US correction, will money flow into Asia, and will they continue? Will we get a rotation? Will it be that kind of correction? But certainly at the moment, Asia looks really exciting, despite what we're seeing, the internals in the US. So that's why I'm excited, and particularly for ETF investors in Australia, there's so many different ways to play this. So we'll see how that plays out. But yeah, point 2, watch Asia this week. It's going to be big. And number 3, we're going to look at some key ideas, some key themes going forward, and things that are setting up and still looking quite good, even though, as I said, we're looking to get some weakening in the broad market in the US. So let's have a look at what happened on Friday. So here's solar stocks, and you can see, unfortunately, we don't have a solar ETF in Australia, but it's worth watching what happens overseas. So this is in the US. You can see like a really solid downtrend. But if we draw a downtrend line here, you can see much like what we've seen with Alibaba, it kind of pops out of that downtrend line and then retests it. And that's kind of what we've got here. Pops out, retests it, and then Friday had a big move. So I'm not even sure what that move was. But we are seeing that apply across the board. So it wasn't just solar stocks. In terms of how we play them in Australia, and this will pop this on Monday in Australia, will be clean. And this was one idea that we had as actually in the ETFadvisor model portfolio. And this is one that bottomed first. And this is in Australia. So just having a look in term, let me fix that up. Just in terms, yeah, it's same kind of thing. It's a bottoming play. This is clean energy ETF. And you can see there's your downtrend line, drawn that there. It pops out of that downtrend line, retests close to the bottom, and then it's crept higher, acting right. It looked a little bit weak here, but it's actually going to probably open up around 660 on Monday, just in terms of the strength we saw in the US in these stocks. So as a bottoming play, that's kind of where we expected it to get a bit of resistance. And now you're probably looking for a move up into the 7 and above before it hits the next point of resistance. So really exciting. There's something happening there. We know energy is a key theme going forward, and we certainly want to have a good exposure there. So that's, as I said, that's in the model portfolio, and that's one to watch this week. So energy, as I said at the start of the video, just in talking about the breadth in the S&P 500, the stocks above the 200-day moving average. This is what's helping that kind of figure, is these, because obviously a lot in terms of clean ETF, even though it's listed in Australia, a lot of these are US stocks. This is what's going to be helping that reading on the stocks above the 200-day moving average. So maybe even if with a US correction, we might get a rotational correction. Unlike the tariff correction, which was everything got smashed, we might start to see, the Mag 7 stocks sell off and money still flows into some of these downtrodden areas, which still have a lot of potential. So energy, key theme going forward. Another one that we really like at the moment, we've outlined how we want to play that with subscribers, is Atom. So Atom is uranium, but it's not just uranium miners, it's the whole value chain to nuclear energy. And so from mining through to building the energy plants and operating them, and all the equipment and whatnot that goes into that. But the reason we're interested in that is look at that move. So that's basically from the lows, it's up almost 100% since April. And the other reason why you want to have a look at this as an investor, or keep this on your watch list, is just look at that back-to-back buying. It's kind of like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks straight up. So that's not mums and dads buying, that's institutional investors rushing in. Then you've had a bit of correction. So that was probably here, and now it's kind of not doing much. It's just digesting those moves. Finally now resting on that 50-day moving average. So that's, we're waiting to see where it gets supported. That's probably, really quite a key point for it to hold. But we've outlined how we want to play this with subscribers, but this is a really key area. Obviously in Australia we don't want to touch it. The government doesn't want to touch nuclear, and or talking about we've got all the uranium reserves we need, but the government doesn't want to touch nuclear. But the smartest people or the smartest companies in the world, the tech stocks, who obviously making decisions based on their kind of best ideas at that point in time. They all want to use nuclear to fill the gap for all the energy that's needed for the AI revolution. So that in itself tells you all you need to know. So profit-making entities who and highly profitable entities who want to use nuclear, that's all you need to know. So look, that's a really key theme. We've outlined how we want to play this for our subscribers, but this isn't going away, and that kind of move you want to keep a really close eye on, and you want to buy where you can. So not saying I'm going to buy that tomorrow, but we've got an idea of how we're going to play that. And one other key theme, obviously AI, we really like, but as I said, with the Mag 7 stocks selling off or expected to sell off, that might come under a bit of pressure and provide a better buying opportunity. But another key theme that's holding up really well is robotics. So AI and robotics are going to go hand in hand. This is just displaying incredible strength at the moment. It's something that we really want to get involved in terms of ETF exposure. And you can see that set up at the moment. Perfect kind of VCP pattern. It's just kind of stalling around here at the moment, kind of up near those highs. So the risk is just that US market selling off, but it's a really key idea, and that's one that we're going to be keeping a close eye on and trying to get some exposure, just depending on how things play out in the US. So just in terms of that US view, it's still not a matter of if, but when we're going to get a correction, and then it's a matter of how we play that and what key ideas and themes and ETFs we were able to buy coming out of that correction. So that's pretty much a summary. US market, looks a little bit dicey at the moment. Wouldn't take much. So we've kind of got half foot out the door. So that's point one. Point two, Asia. It's going to have a really big week. It looks set to really move. Asia and China. Obviously got Japan joining the party, and then you've got Korea there on the right up there as well. So all worth watching very closely. And then we've got some key themes. We've got those energy themes, and then we've also got AI, robotics, all these key themes that we want to get exposure to, and just a matter of how you play that. But we've outlined that very clearly to subscribers. So really exciting times ahead for ETF investors in Australia. Obviously, the Aussie market's at all-time highs. NASDAQ and S&P 500 at all-time highs. Europe popped this week as well. But we just got to be a little bit cautious what you're playing, expecting a bit of a correction, but we've also got some really key ideas which I think could play out well even if a correction does happen. So that's pretty much the summary this week. As I said, I'm pretty excited for the week ahead, and look forward to giving another update in 7 days' time.